Welcome. We're on part 3, setting up your mock portfolio. Now, I use Yahoo Finance because I've been using them for such a long time. I feel very comfortable with them, but you don't have to just use Yahoo. You can use Google Finance. I mean, even in E-Trade, we went over E-Trade, setting up your brokerage account. You can do a watch list there, and it's kind of like set the list of stocks that you're watching or that you have already in there. But with Yahoo, I'm going to go over Yahoo and the reason why I think it's better. Now, they're not, like I said, no one's sponsoring me. I just prefer to have Yahoo Finance. So let's go ahead and get started setting up your Yahoo Finance mock portfolio. And here's the website that you'll plug in. So if you need time to pause, go ahead and pause. I don't have nothing but time. When you get to Yahoo Finance, you're going to hit Finance. Once you log on to Yahoo, hit Finance, right? And when you get there, you're going to see like the main page. It won't look like what I'm showing you right now because the ads are going to change, but you know what I mean. Now, the first thing you want to do is click on the thing that says My Portfolio, because you're going to create a new one and you're going to name it the way you want to name it because it's yours. At the bottom of your screen, right there above the blue box, you'll see Create Portfolio. Now, we can name this anything we want. I'm going to name this figurines after my figurines, right? We're going to go ahead and name it whatever you want to name it. It's yours. Do what you want to do with it. Once you do that, you're going to see a screen, and what we want to do is we want to start adding symbols, right? Stock symbols. Remember, I told you can add anything you want in there. Doesn't matter what it is. If there's a stock for it, you can name it and they'll give you the stock symbol. So we'll go ahead and start setting up some stocks for you. And what I'm going to do is I'm going to give you a few to start off with. That way you can go ahead and start, because sometimes when you're doing this, it's kind of hard when someone's saying, oh, just do this and do that, right? But where do you start? So what I'm going to do is give you a few stocks you can start with, and then we're going to go over the indicators and how you read and do your research for each one. As you can see, I have some popular stocks on here. Most of them are going to be on the NASDAQ, right? Now, we're going to start off with Netflix. I want to use Netflix as my example of how you read and how you do your due diligence when it's time for you to research your stocks. So you click on Netflix. When you click on Netflix, it's going to bring you to a summary page. Any stock you click on is going to bring you to your summary page. That's where all your vital information is, and that's what we're going to go over today. Now, you may look at it and say, oh my God, that sounds complicated. It's not. I'm going to go over it step by step. Now, the first thing you see is highlighted. Everything I'm talking about is going to be highlighted in yellow. So the first thing you want to see is it says previous close. And what that means is that the market is open from what? 9:30 a.m. until 4 p.m. So whenever you see previous close, what that means is that that was the price the stock was at 4 o'clock that day when it closed the previous day. Now, what I told you is that just because the stock closed at a certain price, there's so much action going on after hours that you don't know what the opening price is going to be. And that's what the next screen would let you know what the opening price was the following day. The next thing you want to look at is days range. The reason that that's important is because throughout the day, the stock is going to move. It's going to fluctuate, and it'll go, it may move like 8, 9 points, sometimes 50, 60, 100 points. You never know. So you do is you look at your days range, and what the days range will let you know is that, okay, what was the lowest they had that day? What was the highest it went that day? And so you know how we talked about limit buys? You may say, okay, well, it got up to like 721, but early today it was at like 715. I want to buy it at 715. You can look and see if it actually hit 715 that day in your day's range. But the day's range kind of gives you an option of what the lowest price was that day and what the highest price was that day, which means it can hit the low again, or it can continue going further, or it can be lower than the low. So just keep an eye on your day's range. The 52-week range I love because whenever I'm buying a stock, I look at what it's done the last 52 weeks. The highest is gone, the lowest is gone, and that determines for me sometimes whether or not, like if a stock is starting to drop a lot, and I'm like, okay, well, let's say for example Netflix. Netflix dropped from 721, and like within the 52 weeks or whatever, it was like actually at 300, right? And then now they had a bad day. Now they dropped to like 500. You're like, do I buy that or no? Once you do your research, the news and what the insiders are doing and everything else, you do your due diligence, you can say, well, if it used to be, 300 within the last 52 weeks, and then now it's at 721, but then it just dropped to 500. When is a good price for me to go in? Now, for me, if I see that it was as high as 721, and that's just me, if I see it was as high as 721, I might want to pull the trigger on that 500 because I'm thinking, okay, depending on what the news was, if it was something that was temporary and it's dropped the market, hell yeah, I want to go ahead and get in at 500. So that's why you would want to use your 52-week range, just in case you have a big dip and you're like, okay, is it worth me getting in? That's what I use it for. Okay, you have your bid and your ask. We went over your limit buy and your market buy, right? So when you're doing a limit buy, for example, Netflix is $7.21, and you're like, you know what, I want to get this, but you know you want to be cheap, right? So I want to get this when it's like $7.15. We're gonna use $7.15 again. Okay. Now what you would do is you would look at the bid and the ask, because if you do a limit, they want you to be between the bid and the ask. And what the bid is the amount the trader is willing to pay for a stock. And then your ask is the amount the trader is willing to sell a stock. How I remember that is that, you know, I always have like little awkward ways I remember things. And I look at ask as with the S in there, it's like sell. So I know that the ask is what they're willing to sell the stock for, right? So I would think that bid is buy. Now, and then a spread is a difference between the two. The bid and the ask is good when you're trying to do a limit buy because you want to be within that range. So it's good to know your bid and ask. And most times when you want to buy something, you're going to look at the bid and ask. You don't want to go at the, the lowest. Now, when you put your limit in, doesn't mean automatically, someone's going to buy that. And that's why you want to make sure that you're within a range. Because if you're trying to go ahead and lowball, if they have the limit right here, and then you're like trying to go way below that, no one's going to buy it. Now we have our volume. Remember I told you volume was the number of shares being traded at any particular time. You look at your volume. Volume, for me, I love the volume. The volume tells me a lot. It tells me a lot about the fluctuation of a stock. For example, if you have a stock that the average volume is 1 million shares, because the average volume is going to be the average volume of, what it normally, how many shares they normally trade. Now the volume is going to be today's volume. So if I look at something and I'm like, okay, the average volume is 1 million shares being traded for this particular stock. Then I look at it and I'm like, oh, wait, it's at 4 million? Like, why do you have 4 million shares being traded? What is going on? Something is up. So either people are dumping it or people are buying. Then first I'm going to do is look at the news to find out, okay, what happened with this stock? Did any new news come out? Any finances, anything with the earnings? That volume is going to give you a lot of volatility because that means a lot more people are in the market with that particular stock than normal. So you always look at your volume and your average volume. The market cap, you don't really need so much, but really the market cap is just the value of the company's outstanding shares, right? But it's still good to know. Now the beta is one of the indicators I look at a lot when it determines whether or not I want to purchase a stock. Here's the reason. The beta, anything lower than 1, the stock is pretty much safe. It's going to have slow growth over time. For example, like Ford. If you look at Ford, Ford hasn't changed much. Like you won't see Ford going from 400 to 500 the following day. Now it could happen. I'm not a fortune teller or anything like that. But Ford is like one of those ones that would have a low beta. Under 1, which means it's going to be like a slow progression. And I like the ones under 1 for like if I want like a long-term slow growth. For example, if you have a custodial account, or for example, if you're young, like if you're young, get in the market if you can. If you're young, it's good to go ahead and get you some low beta stocks because over time it's going to accumulate, right? The price is going to rise and you're going to make money off of it. And it's pretty much safe. You don't have to worry about like, something happening where, it went from here, you bought it, and then 20 years later it's not there anymore. So usually anything under 1 is pretty safe. Now, over 1 is risky. That's what I go after, right? Risky. When you have a high beta, that means it's more risky. But I said, the higher the risk, the higher the return, higher the reward could be, right? So anytime you see anything over 1, you're looking at a stock that's pretty risky, but it may have high volatility. It may be, a new AI program that came out, or maybe a new pharmaceutical that came out. It may have a high beta because they have not yet proven themselves yet, and they're still like trying to go through like the FDA channels or whatever, or they're still trying to test the market. They're still doing their R&D. So that's why they're not like stable, because there's a lot of things that make that stock go from here to here, just like that. So Anything with a low beta of 1 is pretty safe. Anything above 1 is usually riskier. Your P/E ratio is just that. It's the price to earnings ratio. Do you need this? No, but I want to tell you anyway. Here's your earnings per share. Do you need this? No, you don't, but I want you to know it anyway. And the calculation is on the screen. It's going to be your profit divided by outstanding shares. Earnings date. Earnings date, I love earnings date. Now, when you see every quarter, companies have to turn in their financial reports, right? Either they made earnings or they didn't make earnings. They lost money or they made profits, right? So every quarter they have to turn them in, and you'll see like the date that they're going to release that. On each stock, they'll tell you the date they're going to release earnings. Now, when earnings happens, you're going to have big moves. You're going to have a lot of volume, a lot of people in the market either buying or selling. So when earnings comes around, again, that's when you will see a lot of fluctuation in the market, whether up or down. And the next one is a dividend yield, and it's the annual dividend per share divided by the stock's share price per share. And then I give you the formula and everything so you can look at that, but that's not anything really that I look at when I'm buying and selling stocks. The first year target, which will help you a lot too. So for example, say you see a stock and it's going for $20 a share. When you look at the first year target, and the first year target is $38 a share. Wouldn't that be a good stock to buy? Now remember, it'll be a good stock to buy based on the numbers, but they're only guesstimates, right? They're like what your analysts are predicting that these stocks would be at that particular time, within a year. So the first target estimate is pretty good to look at as far as like where you're at now. And if they're close to their target, if they beat their target, if they're way below their target, look at your first year target, and that'll help you a lot too when you're doing your research on a stock. Now, so hopefully using all of these numbers, now that you know what these indicators mean when you look at the summary report, it can help you make better decisions. But let's go further, because I want to show you how you actually do your due diligence and how Yahoo Finance has everything I need to make a good decision. Okay, so the next thing we're going to look at is on the left-hand side. You're going to see like summary, news, chart, and everything. Now, it may be on the top side depending on what platform you're using. So let's go to news. The reason news is important is because this will let you know if there's anything that happened with this company lately, like what the current state is. For example, like say you have Tesla, and you look at the news and they say, oh my God, they don't have any chips left, or, they shut down the port or something like that. You were like, okay, that's going to affect Tesla in a negative way. I may not want to pull that trigger right now, right? So you want to look at the news to see where the company is, to see if anything happened. And sometimes you will have people come out saying, hey, whistleblowers. That happened a couple weeks ago with a stock that I was trading options with, and it was doing really good. And then somebody came out in the middle of the day, and it's a whistleblower saying, hey, they're cooking the books. And then it's crap just dropped like 100 points. Oh, man. But you know what? You have to learn to go with the punches. So what I say is, what do I do from now? I don't go back like, oh, I shouldn't have got this, right? So news helps you with your research. Now your chart. The chart shows you like what the stock movements were throughout that day. Now you can also set your chart up. If you look at your chart, you'll see like 1 day, 5 day, 1 month, 5 years, year to date, all. You can have your chart where it will show you how the stock has moved up and down since whatever time frame you set. Like for me, I keep mine on a day unless I'm buying. If I'm buying something, I'm gonna go back and look at it like the last 52 weeks at least, right? But so it's good to see what the stock is doing that day. And as you can see, like with Netflix or whatever, it's going like up and down. It's kind of like having like a teeter-totter effect. As you look at that, you're going to see that the bears are trying to push it down with the red, and you're going to see that the bulls are trying to pump the price back up with the green. They're selling, they're buying, and you can see how that they're kind of mixing together. How you see like the bulls, the bears, and how it's going. Then bear, 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 then bull, bull, bull. You'll see how it like kind of all like works together, and you kind of like know where the market's going. Conversations. Conversations can be good and they can be bad. Conversations is regular people like us, right? Just on there, just either, bitching, moaning, complaining about whether or not, they made money or if they lost money. You're going to have these two types of people. Like I said, you're going to have pumpers and dumpers. You're going to have people who are just there to bash the stock all the time. You're going to have people who are there to push the stock up. No matter what, it can drop 100 points. And you have somebody say, well, tomorrow's going to go to the moon. But the conversations they're good for me because you can actually see. Sometimes you will have people who have some type of insight, you know, like, hey, something just was released, or something just came out, or whatever's down the pipeline. And you still do your research from there. You don't just trust what someone says. But it gives you a good starting point. And I know when I first started trading, the conversations were where I would find like new stocks, because sometimes you have people in there saying, I don't know why you're holding on to this stock. You should buy, you know, Alibaba or da-da-da, you know, you heard it, you know, and they'll give you like, and so you're like, you know what, I might have to look into that. Let me add that to my portfolio, right? And so like when I first started, I got a lot of my first stocks by going into the conversations and seeing what people were recommending. And then I would do my research on that, and then I would either pull a trigger or I kind of like trash it. But it's a good place to get some information. Do not get caught up in all of because you're going to have, they're regular people like us. So you're going to have people on there just there to talk politics or religion or whatever. Don't get involved in all that. You're only going there to do your due diligence, do your research so that you can make some money. Go there, find what you need, make some, and leave. Do not go ahead and get engaged. Historical prices, really good. It's the same thing as your chart, but you actually see the numbers. You'll see like where the stock opened and closed at. And you can set the parameters any way you want. You can have the parameter set where you see it like daily. You can also set the date. Like say you want to look at Netflix, you want to find out like what Netflix did in the last 6 months. You can go ahead and look at the historical prices. You can look at it daily, the daily prices, the weekly prices, the monthly prices. Now what I do recommend is that if you're going to do the, like say for a whole year, do not put daily. You'll be scrolling forever. If you're going to look at a year, or if you're going to go back to the beginning, you want to at least use monthly, right? So that you can see the numbers, and it will still help you with your research and save you some time. And this is an example of, you know, like how your historical prices look. But at the end of this, I'm going to show you like how the historical prices could make you a lot of money. The profile, self-explanatory, just going to show you like the key executives. You know, who's in there, who's the founder, co-founder, CEO, CFO, whatever. So you'll find that under there. The financials are good for people who know how to read them. Not bragging about, you know, I'm a finance major, so this stuff like this kind of like turn me on. But it's not necessary for you to trade stocks. You don't have to know how to read the finance reports. Look at the news. They'll tell you what the financial reports are. Look at CNBC. They'll tell you what the financial reports are, right? But this is where you will find that information for those who want to research further. Now, the analyst section is good, especially if you're doing options or day trading or anything like that, because it shows you whether or not this company has actually made earnings. Each quarter, they'll show you, and you'll see here with Netflix, out of the last 3, they did make earnings twice out of the last 3, and now we're waiting for the next quarter to come. I think they're going to be released on October 17th. So you'll see a lot of volatility there, and so it's a good time too, like if you want to get like Netflix or something like that, and you think it's going to go higher after you do your research, it might be a good time to get in because you're hoping that it goes up even higher. And same as opposite is true. If it doesn't make earnings, it's going to come down lower. These are your options. These are your option prices, and we'll go over that when we talk about options. Another series. Now, these are your holders that own your shares. Like, for example, when I was saying before, you may have 10 shares or something. They're not really worried about our little money. Even though the market closed at 4, you still want to watch it. It doesn't even make sense to watch it. Let me take that back, because there's nothing you can do about it anyway, right? Because the market's still moving from 4 to 8, and you got big boys in there. You look at the ones like Vanguard, you know, BlackRock. Vanguard and BlackRock, if you look at Vanguard and BlackRock, those 2 companies, they pretty much own everything. Everything. If one has Pepsi, the other one has Coke. Well, they will both have Coke. They'll both have Pepsi. One will just probably have more shares than the other. But they own pretty much everything. So you have 10 shares, and just like decide that Vanguard decides, you know what, I just want to go ahead and dump, 10 million shares. It's going to affect the price a lot. And so guess what? You kind of get crushed in the wind, right? Another thing is, if they want to buy 10, 20, 30 million shares at night, that helps you out when the market opens the following day. So you don't really have control over the market. And that's why it's good to research and see what they are doing and try to mimic what they're doing to kind of keep yourself ahead. Now, you can play the game, but you're not going to win with these guys. And then environmental risk and everything like that, it just shows like the controversial level. Like, for example, if you had something and it's like not green and they're polluting, you'll see that indicated here. So now let's go back to historical data. Remember I was telling you that I wanted to come back to Netflix and show you, because I know sometimes you look at it and you say, okay, well, this stock only moved like $4 or $5, like the last month, or, is it really worth me holding it on? What you want to do is you want to be that person who knows how to use these numbers to your benefit. You want to be that person who says, okay, this has a beta, this one here has an average volume, this one has this type of news, this one here, what's coming out. You want to find those diamonds in the rough, because you've had people like us who bought Google when it first came out. You had people like us that bought Apple when it first came out. You had people like us that bought Amazon when it first came out, right? And you had people like us that bought Netflix when it first came out. And let me show what would have happened if you would have bought Netflix when it first came out. So as of October 8th, Netflix, the highest it went so far had been $7.25. That was on October 8th, right? $725 a share. Mind you, this stock has split so many times. This stock has gone to like $300, $400 and split to like $1, $2 again. And then it got high again, it split again, it split again. So every time they split, for example, if you had just, 2 shares and it split, now you have 4, they split again, now you have 8, split again. So the money I'm going to show you now is not even close to the money that you could have made, right? But it'll still give you an example. For example, okay, $7.25 today. Let's go. We go to historical prices. Okay, so Netflix came out in 2002, I would assume by the report. And November 1st, 2002, the lowest it had been was like 55 cents a share when it first came out. Now, what did we say the price was right now? The highest one was $7.25, as of October 8th. But at one time, you could have got in at 55 cents a share. So what if you bought $100 worth of Netflix back in 2002 at 55 cents a share? First of all, tell me how many shares would you receive? And to figure it out, if you have $100 and it's 55 cents a share, you want to take that $100 and divide it by the 55 cents, and that will tell you how many shares you can afford to get. So 100 divided by the 55 cents, which means that you would got 181 shares. So for $100, you would have had 181 shares of Netflix back in 2002. Now, you weren't greedy. You had this on the side. This is for your future. So you wasn't planning on selling it anytime soon. But now you're kind of like thinking about it, right? That was 2002. Now it's 2024. You're like, let me see. Let me see where it is right now. I have 181 shares. Now, you've been there since then. You have more than that because you've already seen several stock splits. But we're going to go ahead and just be, let's say 181 shares. Now, again, how much would those shares be worth today if you held it all that time? 181 shares that you bought for 55 cents a share, which is now worth $7.21 a share, would be worth $130,000, $501, right? Not bad for a $100 investment, right? And that's why I tell you how patience and research pays off. Because what you're going to do, once you're finished with this, you're going to go and you're going to try and see if you can find some diamonds in the rough. Things that are like cheap, things that are like really inexpensive that you really feel has promise. And that's what you want to put in your portfolio, and then that's what you want to do research on. That may be what you want to hold on to in your little nest egg and save it for later. And then cash it out when it's like this. Now that's just one example. You did $100, but suppose you did a $500. Suppose you're a big baller. You say, I got $500. I'm gonna go ahead and buy me $500 worth of shares, right? So say you bought $500 worth of shares at 55 cents a share in 2002 and decided today, you know what? I think I'll go ahead and take a European vacation. I'm gonna go on an African safari. I don't have no time to get back here. What would you have? Now, if you had purchased $500 worth at 55 cents a share, that's 500 divided by 55 cents, right? You would have 909 shares. You didn't cash them out. You held on to them. You're like, you know what? I don't need the money right now, but player, when I do need this money or when I do want this money, it's going to be good. I'm going to hold on to it. So you held on to them until today. Now you're like, I'm going to cash them out. That's right. That $500 investment you made back in 2002, because you bought it when it first came out, is now worth $655,000, right? And that's not even counting the times it split, so I don't even want to think about that because that'll just make me so excited. You know what I mean? But that's the type of money you're looking at if you find the right ones, and if you're not greedy, and if you're not like, oh my God, I'm getting scared, selling it, whatever. Find something, some things, find several that you think have good promise, buy them and sit on it. Just sit on it, right? The same thing like with Facebook. I think Facebook is almost $500 a share when they first started, when they first came out, because I was going to buy it and I'm like, oh, I don't know. I didn't. But Facebook, when they first came out, they did the IPO, which is initial public offering, the IPO, at like $26 and some change a share. And now it's like almost $500. And that was in recent times. So, you're talking about like a few years ago. It wasn't like back in 2002, right? So look at things like that. And right now with AI and all that stuff, you have a lot of companies that shows good promise. Do your research, buy some good stuff, sit on it, and just wait. And especially if you have kids, buy some stuff, sit on it, don't even worry about looking at it, and wait. If you're younger, buy some stuff, sit on it. Now, you'll know when to get rid of it. Like sometimes you'll see something, they're like, oh my God, I bought this at $10, and then it went down to $8, then it went down to $2, then it went, you know what? Yeah, I don't. Do your research. If not, if you don't think it's a company, it has to have promise. So if you think it has promise, don't get scared. The market's always going to fluctuate. We're going to have things that happen. We had the Great Depression, we had the recession or whatever. The market always bounces back. So that's it. Hope you enjoyed this. Hope you can find some really good shares, and then we'll talk later on to find out where you're at. All right? Bye-bye. See you on part 4. Now it's time to go in there with some real money. You ready? We're about to go and buy and sell some stocks. Bye. See you then.